Kevin Algeo, Imara SP Reid, Massmart coming out with a trading update, and that obviously disappointing the market. The company is down at the bottom of the top 40, 3.5% lower at the close at 118, and it comes back to that general debate: are the retailers too expensive?
I think Silvianella summed it up very well. We think Massmart is too expensive at these levels, and we think a good number of these retailers have already priced in earnings to come, and at the moment are looking rather expensive. We're underweight retailers in general. We do think that the earnings have just run ahead, and with the case that we've seen in the banks last week, where the banks were just disappointing on their earnings growth, we expect the retailers to come in with flat to just slightly below earnings in the next few weeks.
What is your overarching argument on the JSE all share at the moment?
Well, it's interesting. At the moment, I think the average PE on the JSE is around 16%, and that's versus an historical average of just above 12%. So on that view, you would think that the market is expensive. However, if you strip out just a few of the very big stocks like SAB, Richemont, and one or two others, and with their PEs in the lower 20s, you actually see that the market in some sectors offers some opportunities. And what that mean is stock picking is important.
And you know my next question is, where does that stock picking take us?
Which are those stocks? Well, so if you look at it, we think BHP Billiton and Anglo American offer fairly good value, and we'd rather be buying that than SAB or
What happens
Richemont
though if a double dip recession does unfold?
Well, this is the big question. If there is no double dip, then BHP and Anglos and the diversified miners actually look cheap. They're all on forward PEs of 9, 10 and so on. If we do experience a double dip in the US, then those stocks are relatively expensive at the moment. We think that a double dip is an unlikely scenario at the moment, but what we do think is moderating growth. In other words, there will be downward revisions in the growth in the next few months.
We have the retailers reporting next week. We've got ShopRite, Massmart, Woolworths. Taking into account what we've seen from the banks and the fact that they generally disappointed across the board, do you think that the retailers will follow the same trend?
I suspect so. I just think the bank's earnings showed that we're still in a very difficult domestic recovery at the moment, that from a credit perspective things are still rather benign, and that after the massive financial fallout that we had in 2008, as well as Eskom power cuts in early 2008, we're seeing a very inconsistent economic recovery, both internationally as well as locally. And so I think some of these stocks, their valuations are looking rather full. What we would be looking at is look to buy some of these retailers a lot lower down, perhaps 10 or 15% of where they're trading at the moment. Some pockets of value that we see is in some of the credit retailers, such as Lewis and JD Group.
Well, Sid was saying Lewis is looking good. He's had a chat to management recently. He feels that it's all thumbs up for the company.
Yeah, Lewis is definitely the better company at the moment and has been after the last few years. However, JD Group has been a little bit forgotten by the market, and I think the credit retailers are possibly the ones that offer some potential upside.
And value investors really like those unloved stocks out there.
Value investors are also pretty cautious about credit retailers because their earnings are volatile and things can go horribly awry. So we'll just cautiously be picking some of those up. And then another one which we like at the moment is one that has underperformed the rest of the food retailers for the last 5 years, and that would be Pick n Pay. We think with their change in strategy, it's still an exceptional company, and we'll be.
Do you think they're going to get their change in strategy right?
Yes, but a change in strategy is going to take a few years, and so if you're patient, we think with pullbacks, I think that's one you can be adding to.
I was speaking to Vivian Tabora about the public sector strike. 1.3 million public sector workers on strike today. The disruptions to the economy, do you as a market commentator take into account what's happening in the broader macroeconomic environment, and strikes, do they unsettle you?
Absolutely. I don't think it makes us specifically change our portfolio allocation immediately, but it is something that we need to be aware of. And come the winters of discontent every year or second year when the strikes do occur, it's something that we do need to be aware of, and it's something that international investors are also aware of. It's an interesting The biggest impact that we look for is, and it was summed up by the economist just before I came on, we've got above inflation increases for the last 3 years, and it's not just marginally above inflation, it's significantly above inflation. That is a concern, and when there's a huge debate about the rand and making our industries uncompetitive, I think we also need to look at wages as well.
Yesterday, JSE Limited out with results, headline earnings per share up 8% for the interim period, and stats like liquidity increasing 53% over the half. JSE Limited, is it a stock that you own, firstly?
It's not in our core equity portfolio, although in our...
Should it be?
It isn't at the moment. They really had an exceptional period, and I think have put the banks to shame, where the banks have been very cyclical in their earnings, which is what you'd expect from the banks. The JSE is one of those options that has actually paid dividends for people who've been holding it. We haven't held it recently, though. So.
The next data point on the international front that we should hold our breath for, we've just got to wait for the next set of jobs data out of the US for the market to take a clear direction again.
Yeah, the US second quarter earnings is coming to an end, and there's just a few more companies that need to report, I think, throughout the rest of this week. And then the market, after having a good set of earnings to focus on, I think will become increasingly aware of the economic environment that we're in and the economic data that is coming out. And that economic data over the last 2 months has been fairly inconsistent. Some of it surprising to the upside, a large amount of it surprising to the downside. And the most important piece of data is the jobs that in the US that people are watching.
Kevin, thank you very much for your time. Kevin Algeo from Imara SP Reid.